Joining us right now is MetLife Investment Management's Chief Market Strategist, Drew Matus. Drew, good to see you. Thanks so much for joining us.
Thanks for having me.
Yeah, we're happy you're here. Is this all proof that we've got a strong economy once again?
Well, I think so. The proof's always in the numbers, and the numbers are looking good. You look at the labor market numbers, they're just stunning. And if you combine good earnings and good labor market, it usually means good investment. So it seems like everything's lining up to just keep the economy cruising along.
Are you worried about higher interest rates cutting into that growth?
No, I'm actually, I think what we're seeing is that higher interest rates are helping that growth. Consumers are much more confident.
Really?
The spike in consumer confidence didn't actually begin when the economy started improving. It began when the Fed started hiking interest rates.
One of the biggest concerns I'm seeing from investors right now is they're worried about the comparables for next year. They think earnings could actually the growth will decelerate significantly. I mean, we're growing at a 25% clip. If we look, 43 companies have already issued, and they've beaten 24.6% is the earnings growth that they've had. So what are your thoughts about next year and the guidance and how people should position?
Well, I think you're going to get a natural slowing. I mean, a lot of the, some of the earnings boost was due to the tax cut. You do tend to get things moving more slowly over time. But, I think you're really looking for something bad when you're looking out and saying, well, next year their earnings growth is going to decelerate. Why don't we focus on what's going on now and kind of look at all the positives that are there? There's no sign of a recession anywhere on the horizon. And for all we know, the next recession is 3, 4, 5 years out.
The market sell-off last week was pretty much stopped on Friday morning when J.P. Morgan reported and Jamie Dimon came out. You had huge gains in consumer spending, huge gains in consumer lending. You also had the tax cuts had boosted their profits significantly. It's pretty much what you're seeing across the economy. But Jamie Dimon is worried about geopolitical uncertainties. It sounds like you're not worried about this trade war, this trade tariff, what could go on in Saudi Arabia, that if we put sanctions on these guys, this oil could go to $100 or plus. You're not worried about these geopolitical concerns?
Look, I mean, they're concerned, but I think if we put everything in context, we cut a trade deal with Canada and Mexico, so we can cut trade deals. We know how to do it, and we apparently can execute on it. So I think worries about trade, we're not the ones who really should be worried about trade. Other countries should be worried that they need to cut a trade deal with us because we can cut trade deals.
I'm sorry, isn't that the problem? I mean, we don't have an off-ramp, it seems, with China. We have overestimated our position. I think they have overestimated theirs. We can cut a deal with Mexico and Canada. 28% of Mexico's GDP comes to us in exports, 19% of Canada. We can bully those guys around. We can push them around. We can't do that with China and the...
Yeah, they've been bullying us around for decades.
I mean, total consumption of Chinese goods in the United States represents 4% of U.S. consumption. 4.
Right.
I don't think 4 is a big number.
But you know what
I'm talking about the effect from China's point. China. It seems like we're worried. We think that China is in a bad position here. President Xi is in a problem here with his economy, but has nothing to do with these tariffs. I don't believe. July, August, and September, their GDP was up. July, August, and September, their exports were up. So right now, China is not feeling any effects of these tariffs. They may feel it next year, but they're not feeling it right now, especially when you raise it 25%. The renminbi has depreciated 9%.
So why is the economy so weak? It's down 30% in just...
The economy is weak structurally because of the bifurcation of wealth in China. China has massive problems right now. They have the coastal areas are doing really well. You have almost poverty in the rural areas. You have a real problem structurally in China right now. And you have a debt problem in China right now, but it's not necessarily because of these tariffs.
Right, but there are other impacts of the tariffs.
I worry about the impacts on U.S. manufacturers who import goods from, say, steel and aluminum tariffs, the import of parts used to assemble, say, bicycles in this country that have a tariff on them, but not the finished goods that are coming in from China. But the one number I look at is the $1.1 trillion roughly in U.S. debt that China is sitting on. And what does China do with that? If they really want to stick it to us, they've got the long view, we've got the shorter view, because President Trump's only going to be there roughly 2 to 6 more years. And China is looking way out beyond that. If they really want to stick it to this president and this economy, they will do something with that debt.
Well, it wouldn't be worth $1.1 trillion very much longer, then, would it?
I understand that. Wow.
The other thing is that the Fed could just step in and buy it. And basically monetize it, which,
given the balance sheet again.
Given the fact that we're in a low inflationary environment, we actually have that option, and then you'd see the Fed become the president's best friend.
Well, he's certainly not his best friend today. He told Trish Regan, yes, Rachel, he told Trish Regan that it is his biggest threat. The president spoke in an exclusive interview yesterday.
My biggest threat is the Fed, because the Fed is raising rates too fast, and it's independent, so I don't speak to him, but I'm not happy with what he's doing because it's going too fast, because you looked at the last inflation numbers, they're very low.
What do you think about that? Why does he keep saying the Fed is his biggest threat?
Well, I think it's funny. He keeps hiring the best people you could possibly nominate and hire for the Fed. And so he's making, you know, if they're his biggest threat, he should stop hiring such good people to put on the Fed. I mean, between Jerome Powell and Richard Clarida, you basically have a dream team at the Fed right now. Maybe he should just sit back and think that maybe they know what they're doing.
But is there a threat from the Fed, given the fact that, you know, we are seeing some cracks in some things? Do we really need a fourth interest rate hike where inflation is non-existent so far? Or maybe it is in wages up 3% year-to-year. Do you think the Fed is doing well with its positioning?
Well, I do, because it's not just the interest rate, right? We also have this massively expanded balance sheet, and they have to lean against that massively expanded balance sheet, because otherwise that would create very large amounts of bank lending. For all the monetarists out there, you'd have to worry even more about inflation picking up if there was some acceleration in growth. So I think the Fed's, you know, they're doing as good of a job as you could, given the hand that they were dealt.
All right, so how do you explain IBM this morning? That's the problem with the Dow Industrials. The company obviously reported earnings. It is down 4% right now. Revenue declined. What's the issue here?
Yeah, I think I can tell you what it is. It's management, and we've seen they had 21 quarters where they kept losing revenue, right? And they bought a cloud company and they didn't do anything with it. They're not getting attribution from their customers to add on services, especially in the higher profit divisions. And so it's an old legacy company that there hasn't
been growth in a long time.
No, there hasn't been growth.
23 quarters.
Here's the question: why in the hell is IBM still in the Dow? Right? Why is this legacy company that doesn't represent, really, for the most part, doesn't well represent the U.S. economy? Why is it still in the Dow 30?
Yeah, well, so I can answer. So the Dow 30 is a price-weighted index. That's why a lot of market watchers like to watch.
Why is it still there? Why hasn't they've replaced it with something that better represents the modern economy rather than the economy 50 years ago?
You'll have to ask Dow Jones Indices.
But is this a specific one story, or you don't think this is representative of the broader economy? You just said that the economy is doing well. So does IBM reflect a specific story? Or?
I think it's hard to argue that any single company reflects the entire U.S. economy any longer. They all have different exposures to trade. They all have different exposures to China. They all have different exposures to energy. I mean, if you think about the U.S. economy now, it used to be energy prices went up, the U.S. economy went down, and now energy prices go up, and the U.S. economy accelerates, and we invest more. So, you know, the world has changed dramatically, even in the years I've been in the business.
What's your favorite sector?
IBM.
Yeah.
Netflix, IBM.
What's your favorite sector, just
and
real
Apple
quick,
is a
going into next year?
So, I mean, I don't tend to look at sector. We tend to look more in terms of is something going to default or not, rather than the total return.
So, in terms of growth, where's the growth in the economy from your standpoint right now?
I think the growth for the next few months is going to be a mix of solid consumer numbers and investment on the part of corporations trying to service those consumers.
All right, we'll leave it there. Drew, good to see you.
Thank you.
Thanks so much. Drew Matus joining us.